lesson, and in this lesson I would like to explain to you why the key level and the market structure can define the trends, and I also give you the example normally to help you understand about the theory right over here easier. So let's get started. I would like to give you a market structure like this to help you can imagine what I try to describe right over here easier. And for example, here is a dollar chart, and you can see the higher high, higher low structure like this. When we talking about higher high, it means that we are compare the high here and the high here. This high is higher than this high. This low is higher than this low, and therefore higher high, higher low is the structure of the uptrend, and for the downtrend that is a reversed. And at this time we have the first pull wave right over here, the second pull wave right over here. Pull waves mean the wave following the main trend. For the chart here, that is the uptrend, and the pullback wave means the wave is a go against the main trend. For example, for the uptrend right over here, this wave is going down. Therefore, here is a pullback wave, and here is a pull wave, and the recent low right over here creates the highest high right here. That is a key level, and I mark here is a key level of uptrend. That is the story we have on this chart. And so why the key level right over here having the important function to define the trend of the markets? It means that when the market is still running above the key level right over here, the trend is still on uptrend, and when the market can broken the key level right over here and run below this level, trend is on downtrend. Why key level can do that, and the logical behind? I and you need to understand our story behind the markets very carefully. And you can see right over here what we have at this time is a simulation right over here. I draw to help you can understand about the real liquidity behind the movement of the markets. For example, at the first pull wave right over here, here is up wave, and behind the up wave having the buying pressure. And for the normal person and normal fund on the markets, everyone always want to buy at the cheap price. No one want to buy at the expensive level like this. Therefore, when the market is on a cheap price like the low right over here, buying pressure will join the markets very strongly. Therefore, you can see the liquidity line right over here is very long. And when the markets come into the higher level, I call here is an expensive price. The liquidity at this time is a weaker lot compared with the low right over here. Therefore, when the markets come into the higher level, the buying pressure will weaker. And at this time, you can see right over here we have the buying pressure like this. And when the buying pressure is weaker at this time, just a little bit selling pressure joined to the markets can turn the way from the uptrend into the downtrend temporarily. And at this time, you can see right over here, when the buying pressure is very weak, just a little selling pressure joined to the markets, and the markets will come into the short downtrend like this. I will give you example after that to help you understand how it works on the real markets easier. And this time you can see right over here, for the seller always want to sell at the higher price. I mean that at the expensive level like this. And when the seller come into the very low price like this, the seller will be weaker, right? And at this time you can see right over here, seller will try to sell slowly from the top because they are still worried. There are a lot of buyers try to push the markets continue go higher. Therefore, they are not confident to join at the top like this, and therefore they will join at the top very slowly with the less power. And when the markets go lower like this, they can be confident to join into the markets. Therefore, you can see the selling pressure will be very strong at the end of the pullback wave right over here. That is a real story behind the markets, and that is a way market maker like the big boy, like bank, like funds work and earn the real money. And we are a retail trader. We need to understand the story market maker, big boys, the bank and the funds is operate the markets, and we follow the mainstream, follow the main trend of the markets to earn the money, right? Because we cannot change the market's movement, but market maker can do it, and we follow the market maker. Therefore, we need to understand the real story behind the movement. And right over here, when the selling pressure is strongest, at this time, market maker will try to join to the markets to buy, because sometimes they miss the chance right over here, or they cannot buy enough at this point, having a lot of the selling pressure. Therefore, they can buy a lot at a very cheap price like this. Therefore, at this point, buying pressure is very strong with a long liquidity like this. Therefore, at this point, at the key level place right over here, having the strongest buying pressure in the markets, you can see the place I try to mark right over here. I call here is turning point. The place change the liquidity from the downside into the upside, because there are a lot of the sellers try to sell in the markets at a very cheap price. Therefore, market maker can buy at a very good price. Therefore, they will join very strongly at this level, and therefore the key level right over here will having the power is really strong. And that is the reason why when the price come into the key level like this, we can buy from the key level right over here. And when the market broken the key level right over here, it means that seller already absorb all the buying pressure right over here. Even at the strongest place, trend will be changed into the downside, because selling pressure is stronger than buying pressure at that time, right? I think you already understand about the true story behind the movement by understanding the liquidity and real story behind the movement right over here. So I would like to give you one example right over here on the New Zealand dollar on a 50 minutes time frame with a chart like this. And here is a candle chart, not the simulation chart. And here also one is my trade last time. Where is the key level on the chart? That is a question for you. For the new trader, here may be a very hard question, because you have not learned about how to define the market structure. I will guide you on next section, but on this section, here is very cornerstone you can define by your understanding, and then compare. After learning the course, you can define the market structure better a lot to explain the markets easier. So here is the market structure I can define for you. I will guide you the rule to define the pullback, the pull's way right over here exactly, right? So at this time, you can accept the market structure right over here to continue talking about the understanding the real story of the key level, and then we will continue learning about how to define market structure together. So at this time, we have the market structure low, 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 high like this. Here is the market structure of Dow chain, and we can define the key level on this chart in this place. Only this high can be called as the Dow key level on 50 minutes time frame, because here is a recent high creates a lowest low. Therefore, here is a key level of Dow chain. This place is a recent high creates a low right over here. This one is not lowest low. Therefore, we cannot use this recent high right over here. Even this one is pretty same as the key level right over here, right? But we need to follow the rule, right? To be simple and to be consistency on the market. And for the Dow key level like this, and for the Dow structure like this, we can give out the trading plan will be like this. We try to entry below the Dow key level a little bit, because sometimes the markets come very near into Dow key level and then going down sooner, and stop loss will be above of the Dow key level, because here is a turning point of the markets. If the markets can broken the Dow key level right over here, it means that trend will be changed into the upside, right? Therefore, stop loss above of the Dow key level right over here is very safety. Take profits at the recent high right over here is my recommendation for the new trader, right? So You can see right over here. Here is my same chart. You can see this chart and this chart. I give out the results right over here. We also have the entry. The markets come into the key level right over here, and then buying pressure very strongly. You can see on my mouse with the red color right here. Markets come higher very strongly, and then selling pressure join to the markets. Therefore, buying pressure will be stopped right over here, and we can have the sideways place right over here where the market is running in the horizontal line like this, coming to our entry place, and then slowly going down until take profits place. You can see how the selling pressure at the key level is strong and how the market structure and the key level works pretty well on the live trading markets, right? I apply and use SI trading system with market structure, key level strategies for a long time. Therefore, I can be confident to confirm to you it can work very well. Even you only use key level strategies to trade on the markets, you still can be a profitable trader who manages profit accounts. So please don't worry. And if you are a serious trader who want to join the trading world, please keep following me and learning about how to trading carefully before live markets. It can help you to save a lot of time and effort. And you can see right over here the markets after our take profits play, the markets even can go very far on the below right over here. But for the new trader, I recommend for you to take profits right on the recent low firstly, because recent low always having a very strong buying pressure on this case. Therefore, take profits at the recent low is very safety. You can see right over here, when the markets come very near into the recent low, the markets also go higher very strongly like this. During strategies part, I will guide you how to trading profits to get the very big profits until the lowest low right over here. But for the new trader, please take profits at the recent low firstly, because you need more experience, you need more psychology control to take profits at the very low price like this, right? Go step by step, you can go more consistent. And that is all for today's video. Thank you for watching and listening to me.